Good evening and welcome to the Accendo Traders Group. This is our video trade plan for Friday, May 16th, 2008. AccendoTraders.com effective trade plans delivered daily. And we have our routine one more time this week as we prepare for Friday's trading. We want to make sure that we are on the right side of our trades by checking news and upgrades and downgrades. And as always, we want to make sure that we have a life. Today, we had sort of an interesting day. It kind of started out kind of lackluster, but we had some buying interest, some buying efforts kick in the afternoon to make the day end higher than what it really looked like going beginning of the day. And we'll talk more about that as we go through our flag list. But again, we see the economic data that we had really didn't move the market. We didn't have a catalyst. And again, it was just basically a renewed buying interest in the afternoon that really pushed us forward, but there's not a lot of news that actually caused that. Also interesting, as you can see, Carl Icahn is taking on the Yahoo board with a proxy, probably trying to get that Microsoft deal back. GE, interesting, putting its business up for sale, appliance business. CBS, we had some merger news. So again, the Dow, all the indexes ended up high. You can see the earnings really didn't play that much into the market today, and then our upgrades and the downgrades. And you can also notice by now that also earnings season is winding down. So we're going to probably head back to economic data, and tomorrow we've got some housing news. We've got Michigan sentiment. But also remember that option expiration is tomorrow. It's the third Friday of the month. Before the market, we have Abercrombie and Finch, retail. We'll see. We have the CLF. Today was the payable day, so tomorrow it's executing. And we have some other split plays that we've been watching. So, with that being said, let's go ahead and take a look at our flag list. Okay, as we look at our flag list for last night, we can see here's the NASDAQ, great uptrend, closing back sort of into this uptrend, closing at resistance at 2530. Here's the Dow, closing still below 13,000. That's our new resistance for the Dow. S&P 500 still above 14,000 and basically closing at the highs of the month. If we go in closer here, you can see we're basically at the wick here, and so we're basically closing at the high. The other thing I would like for you to note is you can see that the NASDAQ actually has closed above the 200, so that's certainly good. The Dow is basically right there. Same thing with the S&P 500 at the 200, and that's really the confirmation that we want to see. Once we see the S&P close above the 200, we can certainly go all out bullish. But we are making higher highs, or more importantly, we're also making higher lows. So, things are definitely looking good. And you can also see that the NASDAQ is kind of leading the market now, whereas back in May, it was the Dow that took off, and now the Dow's kind of consolidating and the S&P's kind of consolidating. And now it's the NASDAQ. What we really need for the S&P 500 to take off is for the financial stocks, the brokers, to start moving. And that's when we'll see the S&P start to lead the market again. The last thing I'll show you with the index here is that, again, you can see that we're at the 200, but the indicators have turned bullish on S&P, bullish on the Dow, and we're bullish on the NASDAQ. So certainly reasons to be optimistic. Tomorrow's option expiration, which is also a bullish stereotypically. We'll see. Remember, we want to trade off confirmation. So, we definitely have reason to be positive about the market. Definitely have reason to be positive about the market. So here's Apple, and you can see the bounce off the 10, which is certainly good. We said we want to hold on to it. So certainly we can probably keep our alert right around 191 for confirmation of a push higher. Remember, we have a catalyst of the conference, the new iPhone, some rumors of a Mac tablet. Here's CNX. Little concerned about this one. We've been moving up for a while, and you can see we pushed the rest of the market closed at the highs. This one did not. So I'm going to actually take CENX off of my list for right now. CHK, getting a little concerned with this one, but I'm willing to give it one more day. CMI, very nice indeed. But at the same time, we're at a resistance level here, And let's check it real quick. We're at all-time highs. Definitely at all-time highs. Little concerned about the volume dropping here. Probably going to take off CMI off the list. May bring it back. You guys know how I do it. Love the rising 3 on CNX. CVX. Not liking these wicks here at all. And it was upgraded today. For right now, I'm going to take it off, but I may bring it back. Fizzler, still holding on at resistance. Going to keep it on the list. JP Morgan was bullish, and we had a lot of positive retail stocks. They probably affected it, but because we were playing the bearish and weren't sure, we didn't really get confirmation there. I'm going to unflag JP Morgan for right now. Still got a nice rising 3 on NSC. I like that. We were going bearish on PCU. Close at the 50. I'm going to unflag it for bearish for right now. Here's RIG. We were looking for a bounce off below the 50. A break below the 50 or a bounce, so we got the bounce. So the bearish side is gone. We're probably going to look at this going bullish now. And Riho, I like the breakout, but I'm going to unflag it for now for that move. Going to keep oil because it's going to have its day. Like WFT, I like X, and still like XTO to the downside. Okay, now we're ready to begin the education portion of our video, Trading in a Zone by Mark Douglas. In the beginning of the book, he's talking about the shift to mental analysis. And yesterday we talked about you basically have two options. One option that most of us take, the one path we take when we get out training is to learn as much as we can. And to be honest with you, I'm still there now. Not from the standpoint of I'm trying to learn new ways to trade, as much as I'm trying to stay, energetic, enthused. When I first decided I wanted to trade for a living or to trade, full time, I was in this seminar, that seminar. I was everywhere. Now, the negative of that was that it confused me, and I wanted to learn all these strategies, and I wasn't able to put them together as a whole and say, this is my system. Now that I have a trade plan, I still want to educate myself. I still want to learn more about the market, but I'm able to focus that into, this is my trade plan, this is my system, and I can bring in new things, bring in new ideas and incorporate that into who I am. I'm not going to change who I am. I am who I am. But I can modify my system. I can modify my trading path based upon some of these new philosophies that I've learned and still trying to learn. But again, most of us get in and we try to learn, or expose ourselves to different indicators and different systems and, different paths. And then again, we get confused and we're not consistent. And the other path, less taken, which is the proper path, is to learn how to trade and learn how to control ourselves to trade. I remember when I was playing baseball as a youngster, and I could knock that ball out, as good as anybody. But I'll be honest with you, when I was in the batting cage, I never opened my eyes. I had a great average, and I played through high school. I had a great average, and I could hit home runs and everything. But when I swung my bat, my eyes weren't open. What's my point? It was pure luck. There was no system. I can look back and say, you know what, I was just swinging a bat and, okay. And the same thing with trading. If you can't go into the market with your eyes open and saying, this is what I see and this is where I believe the ball is going to be, and I'm going to have my bat at the right trajectory to hit the ball and go, it's the same thing. And as long as you are susceptible to clouded vision, keeping your eyes closed to the truth, keeping your eyes open to rationalization, trading is going to be impossible because you're not going to be consistent and you're not able to find that path of sanity. It's just crazy. And again, I've been in so many groups and listened to people, and at least I'm at a point now where I just listen and just move on, because, we all know that there are people around you that will pull you down. And the same thing with these groups. There are people who will pull the group down. So what we have to do is come to to the mindset, develop that trader's mindset so that we can remain confident when the market is going up and down. Just like yesterday where I said, I'm not really sure, but you know what? Here's my system. Here's what I'm going to look at, and this is how I'm going to trade. I'm not going to force anything. I'm going to wait till I see it. And so I was able to remain calm and trade, whether the market is up, down, or all over the place. Trading is easy. Controlling how you trade is not. Someone emailed me today, great question, talking about knowledge, skill, and risk. And what I replied is, knowledge is what you know about the market. Skill is the application of what you know about the market. But risk and accepting the risk is what allows you to get in and out of trades. So, with that being said, there's my podcast. Feel free to subscribe to that to get the full version. As always, thanks for your feedback. And there's my blog, Trade at Your Own Risk. And I will see you guys Sunday for the Weekend Wrap-Up Report.